Hello, everybody. Welcome one more time to Jose's Crypto Journal. I bring you today three news that I found and I consider them interesting. The first one is about BlackRock and what they are doing in the SEI network, tokenizing World 3 real world assets. Interesting, and I like it. Next news look like Pump.fun found a competition in the Memecoin launchpad in the BNB smart change, and this will get good. Clash of Titans, BNB network, Binance Smart Chain, and Solana. Let's see what happened with this news and the new best option launch pad. The last news about Grayscale ETF in Ethereum and Solana. And there is something that I want to point out about staking and how we work staking in ETF with the staking, crypto with the staking, crypto without staking, and a little point of view about that. Let's go to the first news.
BlackRock and Brevan Howard tokenized funds go live on Say the Real World Assets (RWA) market on the Layer 1 blockchain. Say is rapidly expanding. Kio, an on-chain infrastructure platform for regulated RWAs, has officially launched tokenized funds from global asset managers BlackRock and Brevan Howard on the Say network. The two major funds now available are BlackRock's ICS US dollar liquidity fund Brevan Howard's master fund. The launch, announced on October 8, 2025, marks a major milestone in institutional blockchain adoption. The integration means investors can access shares of these funds by holding a Kio token on Say. Kio uses Say's digital asset rails and its own institutional-grade infrastructure to bring these funds on-chain, offering programmability and composability. The tokenized funds can integrate with stablecoins and decentralized finance (DeFi) applications, where they can be used as collateral or yield-bearing reserves. Justin Barlow of the Say Development Foundation highlighted that the integration helps Say become the institutional settlement layer for all digital assets, enabling a superior experience for trading money market funds on-chain. In addition to BlackRock and Brevan Howard, Kio has also tokenized funds by Hamilton Lane and Laser Digital on Say. Separately, Securitize recently launched the Apollo Diversified Credit Fund on the network, which currently holds over $15 million on-chain.
Okay, what I see here, two things. Let's talk about real world asset. Real world asset will come to the blockchain. Blockchain is way more flexible, it's more democratized. The access is easier, less frictionless, resistant, etc. Now, what happened and what I see here? Let's say that you put the Dow Jones Industrial Average in ETF and you put that in a smart contract platform decentralized. The DeFi protocol, what you're going to do, you buy that Dow Jones Industrial Average. What I put as an example, the Dow Jones is because it's big and it's stable. You buy that Dow Jones, you put it there, and you will find for sure some smart contract DeFi that will give you stable coin against as using as collateral those stocks that index Dow Jones Industrial Average. That would be a way easier way to just buy the stocks in an exchange, in a brokerage, find a bank that want to give you a loan against that ETF, Dow Jones that you have, etc., etc. I see that DeFi and crypto is faster, is easier, and you will have more options. You don't need this huge bank with a lot of paperwork to approve or don't approve the collateral, a lot of term and condition, etc., etc. DeFi is way easier, way faster, frictionless, and is what I see here, guys. This will happen. Rich people don't pay taxes. Why rich people don't pay taxes? Because debt doesn't pay taxes. You buy an stock, you buy an ETF, you buy gold, whatever you buy. After you own it, you put it in somewhere or you give it to a bank, or you make a contract against that, you borrow against that, and when you borrow, you use that money, you reinvest that money, you do whatever you want with that money, and you don't pay taxes. That is what I see behind real world asset. On top of that, of course, to have a brokerage account if you live in another country is a lot of problem and complication. To invest in the United States through a brokerage account, international stuff like that, crypto will make everything easier, democratize finance. Now let's go with say. I don't have say, but I do have a study say, and I do like say, and I see a future in the say network. I am considering when I sell everything that I have, all my crypto. I will planning to sell now October, November. Let's see. As soon as I reach my target, I will lump sum sell everything, and I will start dollar cost average with 50% of my portfolio with 33, and with the other 33, I will save it and wait for the bear market. The point that I want to do, beside the comment of my investment strategy and my portfolio, is that I will consider say, as I will consider Swiss, I will consider Doge, BNB, and other network. But say is one of the crypto that I don't have it, but I want to have it. I have studied and I do like it, and I am happy. I am happy finding this news, and I am happy to find that if they in this niche of real world assets, if they do good, is what I have said before. I think that each blockchain need to be good at everything as they are, but on top of that, be good at a specific niche and identify and be popular in that niche is a good point, a good advantage, and something that every decentralized smart contract platform need. Anyway, let's go to the next news.
BNB chain Memecoin Launchpad 4. Meme flips Pump.fun in daily revenue. The Memecoin market narrative is shifting towards the BNB chain. With the new Launchpad 4, Meme briefly overtaking Solana's dominant platform, Pump.fun, in 24-hour revenue. Key highlights: 4. Meme generated $1.4 million in revenue in a single day, surpassing Pump Fun's $885,442, signaling a strong surge in interest for Binance-based meme tokens. The total market capitalization of Memecoins launched on Four.Meme has now crossed $1 billion. The platform's momentum is largely driven by its top meme coin, Four, which is inspired by former Binance CEO Changpeng Zhao's Four Fingers gesture. Despite a previous hack attempt, the Four token has seen a weekly surge of over 326%, indicating strong community backing and trading interest. Other tokens in the ecosystem, such as Dollar Dust, up 1,245% weekly, and Dollar SCN, up over 100% weekly, are also seeing massive gains. This rapid growth and high trading volume suggests that BNB-based meme tokens are becoming the latest major trend in the current crypto market cycle, capturing attention that was previously focused on Solana meme coins.
I like Memecoin because I like freedom. I like people do whatever they want. It doesn't matter if it's more risk or less risk. I don't want a government telling me what I can do, what I cannot do, what is too risky, protection, legal protection for the government. No government, thank you so much. I don't want you. I don't need you. I will do my own diligence. I will do my own investment. And if I get screwed, if I lose my money, whatever, it's my responsibility. I don't need you. I don't need your legal friend. And I don't need you to keep making laws and making laws and making laws that eventually, supposedly and technically, are designed to protect me. But at the end, what they do is enslave me as a free, natural human being and creation from God, not from any government. I don't belong to any government. I belong to God and to myself. That is what I like Memecoin. Now, let's go to this news. I like the idea of having Memecoin in Ethereum, on Solana, in Binance. Now, in Solana, of course, Solana is faster, is better, is easier, and I like the idea of the launch pad. Dump, pump that fun, dump, pump that fun. Also, I like a Memecoin project like Snake in Cardano that I have invested in it. And there are multiple Memecoin project that has built inside the Memecoin, like Pengu, for example, a creation of NFT or creation of other project inside them, which I cannot see in a smart contract inside of a Memecoin, which is something that I like. In this case, I do like Binance Smart Chain. I consider that it's extremely centralized. I have never invested in Binance. I do have invested in Cake Pancake Swap, and I like and I have used a lot the Binance Smart Chain. The only risk, the only thing that I would like to point out here is my experience back in 2021 when I was investing a lot heavily and I lost a lot of money in play to earn. I do invest in play to earn ecosystem games like Axie Infinity that they were native to Ethereum, and I lost money in some of them, and I lost money also in play to earn native to Solana, and I lost money in play to earn native to BNB. What I see here is that making Memecoin is easier than making play to earn um, video games, basically, which I hope that Binance become strong and good at making good quality Memecoin. So far, we need to see. I don't know. I don't put my hands on the fire for Pump.fun or for that meme. I just like idea. I just like diversity. I just like options. And I hope that this work, that this work for that meme and this work for Binance. I would like, even though one more time, I consider Binance that is centralized and I don't like it. I don't own it. I'm thinking maybe in the future, as part of my strategy, invest in Binance, even being centralized, because not everything have to be perfect, and no blockchain is perfect. Every blockchain have the Achilles heel, and I think that Binance is centralization, but Binance is amazing. I used to use stablecoin transaction using Ethereum. After I thought, forget about the gas fee is too expensive, I started using Tron. And lately, what I use for my stablecoin transaction is BNB, which means maybe it's not my favorite smart contract platform, but works, and taking a little bit of risk with the downside of the centralization. Okay, I'm willing to do it. Centralization is bad, but let me tell you something to be the devil advocate or whatever to help BNB and Binance and the exchange and everything. Uh, they don't want the BNB network to collapse. Even they are centralized, they control, there are only 20 nodes. The last time that I checked about that, even they are highly centralized. Being centralized doesn't mean that the creator, the owner, the validator, whatever, they are going to sabotage the network. Nobody, centralized or decentralized network, want to self-sabotage themselves because there is a lot of competition. If Binance steal from me, I will not use Binance. It's like this exchange FTX. Well, first of all, know your key, know your coin. Don't put all your money in one exchange. Diversify between a couple of exchange. Try to use the best quality one, even though supposedly FTX was a good quality one. And do your own strategy. But the point that I want to make is that generally, no company, no smart contract, not even a stupid meme coin, uh, pump and dump exists, etc., etc. But Binance is huge. Nobody going to blow up the huge work that CC and too many other engineer, investor, etc. have put into the Binance Smart Chain, into the Binance exchange, etc. They will be in trouble if they try to force impose and restrict and corrupt the network and steal from people. I still don't forget ever. I will never forget when CC planned a 51% attack in the Bitcoin network. Let me repeat. I will never forget when CC planned and took into serious consideration make a 51% attack in the Bitcoin network. That is something that we shall never forget because even there was a specific circumstance, whatever, just talking about is bad and taking serious attempt to do it is very bad for the industry. Just if you want to know about that, I will highly recommend you to check what happened back in 2017, I think it was, because of a hack that Binance Exchange has. Well, anyway, the point of the matter is that I hope the best for Binance. I hope the best for that meme. And also, I would like to point out that these news are coming from crypto.news, and I will put in the description of this video the three links of the three news that I will be sharing with you. Let me go to the next one and last one.
Grayscale launches staking for Ethereum and Solana ETPs in US. First, Grayscale Investments, the world's largest digital asset-focused investment platform, has introduced staking capabilities to its Ethereum and Solana products, marking an industry first for a US-listed spot crypto exchange-traded product, ETP. The feature was activated for Grayscale Ethereum Trust ETF, ETH, Grayscale Ethereum Mini Trust ETF, ETH, Grayscale Solana Trust, GSOL, launched on October 6. The move allows investors to not only gain exposure to Ether, ETH, and Solana, SOL, but also earn passive staking rewards directly through a traditional brokerage account. Grayscale CEO Peter Mintzberg hailed the initiative as a first-mover innovation, emphasizing that it unlocks tangible value for investors. Key details: GSOL access. The Grayscale Solana Trust, GSOL, which trades over the counter, OTC, is now one of the only ways to access SOL staking through traditional markets. It is expected to become one of the first spot Solana ETPs with staking upon regulatory approval to UP list. Mechanism: Grayscale stakes passively through institutional custodians and diversified validator networks. Benefits: staking helps secure the underlying proof of stake blockchains and provides shareholders with passive income, which accrues within the fund's net asset value, NAV, for potential tax efficiency. While this blending of traditional finance with staking has regulatory support, all ETPs carry significant risks, as they are not registered under the Investment Company Act of 1940 and may involve market volatility and the potential loss of principal.
Okay, let me point out a couple of things that I found out. An ETP and an ETF is not the same. An ETP not necessarily have to have the underlying asset. On top of that, Grayscale have this ETP in a trust, which means when you're going to claim your asset, when you're going to claim your money, when you're going to claim your staking, that ETP can tell you, sorry, I didn't have 100% back the money that you invest into the underlying asset, supposedly the Ethereum of the Solana, which I cannot give you back your money, nor I can give you the Solana, nor I can give you the Ethereum, nor I can give you the staking reward. On top of that, they set up this in a trust. Good luck trying to get money out of a trust. Good luck trying to suing a trust. Well, that is the first impression that I check, reading a little bit the difference between ETF and ETP. Second point, staking. I like staking. I like the idea of staking, which means at this point, what I am thinking and the point that I want to make is that when people have to choose between Bitcoin or other coin that doesn't give staking, or Ethereum, Solana, Cardano, Avalanche probably. I don't even remember if Avalanche has a staking. I would assume yes. What people going to choose? I think that the idea of staking is similar to the idea of dividends. There are people that only invest in stock that give dividends. There are stocks that don't give dividends, that they are good, which means Bitcoin doesn't give dividend, doesn't give staking, doesn't give that stuff, at least not directly. You can borrow against and all those things, but well, you can borrow against. Also, you can borrow against an Ethereum, collect the staking, borrow with the money that you borrow, reinvest, etc., etc. Which the point that I want to make is that I see and I like the idea of staking. I like ETF or ETP. ETF are better. They have a better legal frame. They have to have 100%. I think I'm pretty sure they have to have 100% back whatever money that you put into the underlying asset, which ETF are better. Anyway, I believe know your crypto, know your key. I don't see myself investing in this product. These products are not for me, a single natural person. These products are more for banks, corporation, country, and other people, other institutions like that. Well, anyway, the point of the matter, are you a person that are okay without staking, or are you a person that demand staking? Are you willing to invest only in crypto that give you a staking reward, or you are one of those that don't care that much about the staking, mining, corporation, or validator, whatever, are the one making money, and you are not making money out of that. You are only making money out of holding the asset and the limited supply that exists. They are also, on top of all this, they are burning mechanisms in some staking and some transaction burning percentage of the transaction fee, which is also a way of you are not collecting dividends, but because of the amount of the asset will decrease because each time that there is a transaction, a minimum amount of that asset get burned, go to a wallet that nobody ever can touch it, remove it, except a quantum attack. Let's don't open the door. You choose what you want to invest. What's the only thing that I want to point out about that ETF, ETP, staking, interesting stuff. A lot of things that we shall take into consideration at the time of investing, especially if you are investing in the long term. If you are just doing trading and an exchange, forget about all this stuff. Well, guys, thank you so much for your time. If you have any question, you can ask in the comment. You can like, subscribe, ask me question, leave a comment. You can watch also a video that can pop up here in the left hand side of your screen, in the right hand side of the screen. And I hope you see you here one more time in your channel, Jose's Crypto Journal. Thank you so much. Take care.